Take one. We're keeping this running, boys. By the way, you guys noticed the different shirt? First non-Bulls on Wall Street shirt in our filming history. Let's do this. Debt ceiling. That's probably a term you guys have heard non-stop over the last couple months, right? Everybody in the world has been so afraid about this debt ceiling mumbo jumbo. And I've been getting tons of questions like, will this actually do anything to the stock market? Is it going to crater the world? So on and so forth. No. We have seen this exact same scenario a few different times recently in 2011. And there are some small market fluctuations. But in the end, debt ceiling stuff is very minimal impact to the markets. A lot of people still think that we're in a bear market. And then they use stuff like this debt ceiling and a lot of this fear porn to really get people worked up about what's going to happen in the economy or what's going to happen in the market. Look, in debt ceiling doesn't matter. Republicans, Democrats, they're all the same. Look at for all the stuff the Republicans have been talking about, they're conservatives, right? All they ended up doing was getting like $10 million off some gender reveal parties and a couple $1,000,000 saved here. And right, they claim victory that they cut down the U.S. debt. But in essence, like we're still overspending trillions of dollars a year. So in the end, the Republicans are Democrats, the Democrats are Democrats, and everybody is moving on. And what we really need to do is focus on the price action of the market. The facts of this are that the NASDAQ, and I use the QQQ ETF as my proxy, is up 30% plus this year. The individual stocks that you guys are following, like Meta, Nvidia, are up in the triple digits. I repeat, triple digits. These aren't small cap stocks. These are big name stocks that are going nuts. Beyond that, we have baskets of stocks in themes that are starting to play off. A hot market will always have certain themes where speculation starts to grow. For example, in 2021, right, we had that EV battery theme. And you started to see all these companies just go nuts, like Arrival, RMO, Excel, which is not along anymore, right? CHPT, Lucid, Rivian, so on and so forth. We're starting to see a theme right now in AI, right? If you look at even a ticker such as AI, right, this thing's up a double in the last couple weeks, right? If you look at some of the smaller AI companies that are running, like IONQ, which is more into quantum space, it's up a double in the last few weeks, right? That's what we need to see in a healthy market. When you're looking at CNBC and all this kind of junk out there, right, what they're talking is that this is a really narrow market, that the handful of 4 or 5 stocks are just leading the way and that there's nothing else happening. Well, that narrative is actually false. The best way to figure out where the strength in the market is to go beyond the indexes and take a look at market breadth. Market breadth is a measure of how many stocks are actually participating in a move in the market. Now, we're momentum traders. As momentum traders, we want to be aware of significant thrusts in the market, right? Momentum thrusts. So, advance versus declines, which is like one of the more common ways to look at market breadth, doesn't really work because if a stock is up 2 pennies on the day, it's going to be showing as advancer. But does that really mean that there's really any action in the market? What we like to look at is, right, stocks that are moving up 4% or more in a day. And when you have something that's moving significantly, then we know that we have actual strength in the market. So right now everybody's saying this is a narrow market, that there's only a few stocks moving around. But if we look at market breadth, we start to see a different picture. What I like to look at is the ratio between breakouts and breakdowns, but significant breakouts and breakdowns, because as retail traders, right, like trading 1% moves in Dow stocks, or right, 1% moves in Bank America, that's not going to really make us any money, right? We need significant moves. So when I look at market breadth, I'm looking at a measure of breakouts versus breakdowns in this manner. So now when we look at like the last month or so, and we start to see, right, that increase in the ratio between the number of breakouts versus breakdowns, what we can start to see is that the market is starting to become a lot more healthy, and we are starting to get a little bit of a dose of that speculative action that we need, right? When we start to see 300, 400, 500, 600, 4% breakouts per day, that's giving us a very tradable market beyond just like your major market movers like Tesla and so on and so forth, right? When we start to get in those 400, 500s and the amount of breakdowns start to lessen, then we start to get a lot more healthy market where you'll get less shakeouts, where you'll have to do less shorting, and you're going to be using more trend following techniques to actually extract profits. And so I think that we're getting into an awesome phase in the market. Debt ceiling this, debt ceiling that, like none of this matters right now. Like if you're thinking about like interest rates and what the Fed is doing, or recession, right? Everybody's talking about those things. And that actually will probably come true. These things happen. But markets rebound in advance to what the economy is saying. So if you think of the market, it's a forward-looking mechanism. It's going to move 12 to 18 months in advance of what's happening. So oftentimes in the market, I saw this in the 2008 recession, was that the market started to rebound in 2009 when the world still looked like it was ending. The markets in the COVID crash started to rebound when it looked like the world was ending. And we're seeing that now in a much, right, less dramatic fashion. But right, as people are getting more anxious about things like recession, and right, obviously these interest rates have been popping for quite some time, the markets are starting to, in advance, show, right, that the cycle is turning. So beyond the NASDAQ, if you look even at the SPY, we're sitting right at that dreaded 420 spot. We're so close to a breakout right there too. And if that starts to break out and starts moving up, then market breadth will start to increase even more. So a couple things that we really want to be doing in this market. Number one, obviously you want to be trading these tech stocks. This AI theme is not going to go away. So most of these AI companies are probably going to be fluff anyways, right? So all these like $3, $4 ones, just like in the EV phase, they'll all end up going to zero at some point. But for the next few weeks, right, the pump is on, and we want to be participating in them. I'll keep a list of them for you guys. Beyond that, right, your Google, Microsoft, possibly even Tesla, right? These are going to be, and NVIDIA, of course, these are all going to be probably the AI names that end up being kind of the big tech leaders of it, and they'll get that tailwind of it. Now, as all things, these cycles end always badly. I'm sure that AI is a theme that's going to be around for years and years and years, right? Just like EV, you can go, and if you go up 1,000% on a stock in a year, like you're probably topping out for a long period of time, right? And we saw that in the EV, really besides Tesla, right? What of the other EV companies even survived, right? Like they all are sitting at $1, $2, 50 cents. A lot of them are just not even in the business. In the AI theme, don't start thinking like these $2, $3 stocks are going to mean anything. Probably the big boys will be the ones that last, but for a little bit of fun time, right? We want to be playing some of these turds. I've got a list that's included in the comments for you guys. There's a whole list of these kind of things like wilds and AI and CXAI that you can day trade back and forth. I would not buy and hold any of these things because they all are probably zeros, but we are in an awesome situation in the markets. We are in a bull market. If you look at any angle of this, we're in a bull market. So don't worry about things like the debt ceiling, the interest rates. Follow price action. When the price action changes, of course, we will adapt with it. Smash that like button if you enjoy these videos, and make sure to leave me any comments if you have any questions. I love hearing from you guys. And if any of you guys ever want to talk about trading, you can email me, Kunal, Kunal, @bullson.ws. Look forward to hearing from you.